first off, the renewals that are coming back are crazy. So you're going to have to wait to see what the renewal comes in at. Secondly, is the you never know what type of policy they purchased. Okay, and the other thing is you never know by looking at that premium what their total insured value was of the current property. That guy could have purchased a property 24 months ago when the total insured value was $500,000. And now with inflation and everything else, it's now at $750,000. The thing about property and casualty insurance is, especially with what's been going on with evaluations in these properties. I mean, you've seen how much multifamily has gone up. You've seen what inflation has done to the cost of construction. And so when you buy an insurance policy, a property casualty policy, there's a total insured value that comes along with that property. So when you buy it, they say, okay, this is what the total insured value should be. Over the last couple of years, that valuation, the TIV, has pretty much remained the same. It has remained the same, but the value of the policy has skyrocketed. And the way the insurance company has protected themselves in this scenario is they built in an 80%, majority of them are 80% co-insurance features, which means that in order for you to get 100% of the valuation reimbursed to you in the event of a claim, your total insured value on the policy has to exceed 80% of the appraised value. And when you think about it from an insurance standpoint, that's only fair. If you're insuring your property for 50% of the valuation, you insured it for 500,000, but now it's $1 million, and the place burns down, or 80% of it. Now you're asking them to rebuild $1 million property for the premium of a $500,000 property, and that's not going to last long. That's why for property and casualty, they've built in this 80% co-insurance. It's really only fair. But the problem is when you're looking to buy a new policy, and you're trying to figure out what your NOI should be, or what your NOI will be once you get it up and running, you cannot look at that guy's policy and say, okay, it's going to be X dollars of premium, because yours might be a lot more.